This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io.
Hello everybody, welcome to Wrecked City. We are staring in the face of Wrecked City. So it's a one-way ticket to Wrecked City, and clearly this means we're going down to 10, to 8, to 5, to 0. Psych, not really. It's not really going to do that. So what we saw last night definitely was a bit of panic selling. And I suppose if we look back on the volume, we always say how this area is where the smart money stepped in, with the, Matt Damon and his crew. Be brave, buy. And that's what this area was, quite significantly, with all that volume. Bitcoin trading at a huge volume. Between 15 and 25, then the volume sort of dried out as we reached these $30,000 zones, even all the way back down to 25,000. So this whole area above 25,000, low volume, below 25,000, high volume. So that to me makes it feel as though this area here, the 24,000 to 25,000, so mid 24s, is where smart money is going to step back in again. This would make this area an extremely strong area for dips to be bought. Now, I bought this dip, to be fair, this golden cross on the 3-day. That was where my first buy order was set, and a Wojak scream took place. Not really, but yeah, I did buy that dip, and obviously it's dipped lower than that. So it's just this game we play. The biggest bulk that I bought was at 21,500, and I still expect that to be a decent buy for the long haul. So. And also, where I bought here was a decent buy for the long haul. But right now, it doesn't feel that way. Right now, it's a matter of assessing the chart as we stabilize after what was basically a 12% move in a 24-hour period. So the 4-hourly is kind of Wrecked City. The RSI approaching significant lows. Money flow index approaching significant lows as well, while the chart basically bleeds out, and we are now below the 26,600, which is like a decent place really to think about buys. But now this area down here, the 24,400 being a significant low, if Bitcoin was to make its way down there over the next few weeks or so, is super strong. It is super strong, and I'll probably be looking to buy up quite a lot of everything below that level. But personally, if you're looking to make a successful trade on this, rather than just buying a blind dip, which is fine to do for an investment purpose, but for a trade, you need to start to see some change of behavior, really. At the moment, the behavior has not changed, although it is definitely significantly low. So I think a bounce from this area is more likely than a continuation down. I think that is more likely, and I know we've already seen a bounce, but if a continued bounce, maybe up to around 27,200, is probably more likely than immediate further downside. But for the moment, it was a 12% move, and normally after a 12% move, you would expect some inverse reaction. So a bounce in this case, maybe this is the bounce and we get rejected at the first major horizontal, which is where we've already seen right now. Or we continue up a little further to perhaps the 27,002, maybe 27,006. If we were to break above these areas, then I'd probably think that this is going to have a full-on reversal, as crazy as that sounds. This would be nothing but a bear trap, if anything. But right now, it doesn't really seem like a bear trap. It just looks like a giant, big, horrible, disgusting candle with a nasty wick on the end. But it's early days. It is Friday, and with that comes the closures of traditional markets at the end of the day. So what are they doing then? Because the Dixie has broken out. I've still not added it back to my chart. The Dixie has broken out, and what we see on this Dixie is continuation from today. So we've got ourselves above 200 simple and exponential, retest of that, and we look like we probably want to move up towards 105.3. Maybe not immediately, but this is where it points to. Still no pump signal, but we're very close to receiving that. And every aspect of this chart wants to go there. That's where it wants to go. Okay, fair enough. Traditional markets, what are you up to at the moment? So Bloomberg said $5,000 for the S&P. I said probably not, simply because you said that it would. So it looks like they basically called the top on that. Honestly, there's something. As soon as big players, it's like Kramer, isn't it? As soon as they start saying that something's going to happen to a very large audience of retailers, it's very often the opposite happens. So yeah, we've broken down on the S&P. So this isn't this isn't unique to Bitcoin. This downtrend is not unique to Bitcoin. We see the S&P down 5%, with probably a view to come down lower to potentially even a golden cross retest, all the way down here at 4,225 at the moment. So that's on the cards, which means that Bitcoin is probably going to follow that. What about our mate gold? What's gold doing? Down below 19 now. Okay, fine. If that's what you want, we are probably going to be seeing. I'll be looking for maybe a move a little lower before a bounce, but it's not happy because the dollar's not happy. So if the dollar's not happy, gold's not happy at the moment. Sometimes you do see a inverse correlation with that, so dollar can be happy and gold be happy also, but we're not seeing that at the moment. And this looks like, I suppose, a breakdown on the technicals. Any other aspect of this chart that we can hold on to? Not really. The 50 exponential potentially giving it up. We need to see how we close today, again being Friday. If we can close back above 19, I'd be happy with that and probably be looking to take a trade. But for the moment, all the supports are below us, so taking a trade at this exact point right now is not really the right way to do it. Looking to see if we can reclaim those, and probably the trades for gold. We're going to try and attempt those trades again on Monday. Oil finally did get its rejection, but it seems like a support on the 50, on the weekly, on the daily. What we're seeing, any supports being reflected here? No, actually. So a potential golden cross forming, a potential rejection around 81. So maybe we've avoided the oil move above 83, which is good, because that would have been a big bold breakout move, and that's where things would have got really nasty. So a much deeper consolidation for a much longer period of time as CPI runs through hotter and hotter and hotter, and the Fed have to adjust to deal with that. So long story short, what we're seeing is probably a consolidation in all markets, but given Bitcoin's big bold move, I think a bounce to these areas and then rejection, and then we'll see where we go from there. There's no need to, I suppose, go all in on every single dump. I've been trying to stress to everybody, especially on the Patreons, like dollar cost averaging into moves like this is relatively good idea. If you have $1,000, you spread it that $1,000 over 3 or 4 large dip down zones, right? And we can see all of those on the charts, and they're like 10, 25, as much as 50% away from today's, well, maybe not today's, but price action from the last week or so. So but that's reasonable, because on a risk to reward basis, a 50% pullback compared to a 500 to 1,000% gain is okay, especially when you're staking it over a couple of years as well. That's pretty sweet. But obviously we have to accept that you'll never get the low and you'll never sell the top, but you will definitely get a decent slice of the pie. And this is where we do that. But at the moment, I would say the next major area for a Bitcoin bounce, possibly reversal, if we're not going to get one from here, 24,350. That would be my next bid on Bitcoin, really. So my next dollar cost average limit order will be slid in there for me to go to Wrecked City afterwards, all the way back down to my original big buy down at 21,000, which I don't think is going to happen, but if it does, so be it. This is the game we play. I've been trying to explain that what we see for Bitcoin is an accumulation range, from maybe not this area, but from around the 20,000 to around the 40,000. I would class this entire area as an accumulation zone. So it's a 100% range. And this is where the majority of the price action is going to take place, probably for the next 18 months before it finally breaks out. Similar to how Bitcoin's accumulation range was roughly between, we'll call it 6,000 and 12,000. Again, roughly 100% range. And that's where the majority of the price action took place in the last bull market before goes straight up. So that's what I'll be looking for in this bull market, really. Price action between 20,000 and 40,000, meandering, fannying around with big ups, big downs, lots of emotion. But if you stand back and admire the likelihood of this continuing to perform as it did previously, then that's basically what we should expect. Now, altcoins can do whatever the hell they want during that period. That's what Bitcoin's most likely going to do. So if you think about today's price action and the price right now, it's lower to the bottom of the accumulation zone than it is to the top. So if you, I suppose, stand back and think about that for a moment, you think, okay, $20,000, low area of accumulation, $40,000, still a decent buy, for what we project moving forward. This area and lower, actually, you're right, that's a good idea. That's a good idea. Risk to reward, that's a good idea. So think about it like that. If you're trying to trade this, futures, derivatives, whatever, I probably wouldn't bother with it, to be honest. I probably wouldn't bother, especially with traditional markets still looking droopy, because it does make the possibility of Bitcoin going down still more likely. With dollar up and then S&P down, obviously Nasdaq will be down, gold down even, everything down. So the chances of us falling further down, or should I say creeping further down, is still quite likely. So I'm not saying that there is no opportunity here on the short-term time frames, but there is none for me. At least I'm not going to bother trying that. I would probably try around these levels if, of course, we had divergence plays as well. But we don't. We've just got oversold money flow index and RSI. And that in itself isn't enough to say we've hit a low. It might be an area for a bounce, definitely, but as we've basically got no area of support that we're bouncing from, I wouldn't be particularly convinced. If we did reclaim 26,600, maybe that would be a trade that you could possibly make up to maybe 27.7 or something like that. But right now, it's definitely worth sitting back and admiring this dump. And dollar cost averaging, the lower we go. Anyway, I'll leave it with you there, but thank you for watching. Hope you have a nice day. Take it easy.